HBAR slides 1.7% to $0.170 as channel support crumbles. Hedera's token faces selling pressure after a failed breakout near $0.1716, with technical patterns signaling potential institutional distribution. Hedera's HBAR token slipped 1.7% over the past 24 hours, retreating from $0.1669 to $0.1697 after a failed breakout attempt above key resistance. The move unfolded within a volatile $0.0089 range, reflecting 5.2% intraday swings as buyers struggled to maintain momentum. Early support at the $0.1633 base held briefly before the token's ascending trendline gave way, signaling weakening bullish structure. The decisive shift came around 1300 hours Universal Time Coordinated, when trading volume surged to 109.46 million tokens, 87% above the 24-hour average, coinciding with a rejection near the $0.1716 resistance level. That spike marked the start of sustained selling pressure, with a subsequent 4.72 million token surge at 1339 confirming a clean breakdown below $0.170 support. Technical signals now point to a developing distribution phase rather than a short-term dip. Repeated failed rebounds, declining highs, and volume-driven breakdowns suggest institutional selling may be driving the move, contrasting with typical retail volatility patterns. A brief 3-minute trading halt between 14:14 and 14:17 Universal Time Coordinated, during which no volume was recorded, added to uncertainty. How trading resumes around this pause will help determine whether BAR's bearish bias deepens or stabilizes if liquidity returns. Support/resistance, volume analysis, chart patterns, targets and risk, reward. Disclaimer. Parts of this article were generated with the assistance from AI tools and reviewed by our editorial team to ensure accuracy and adherence to our standards. For more information, see CoinDesk's full AI policy. Primary resistance holds at $0.1716, following strong rejection on heavy volume. Ascending trendline support was broken at $0.170 during a sharp afternoon sell-off. Base support remains at $0.1633, established from overnight session lows. Peak volume surged to 109.46 M tokens, which is 87% above the 58.5 M SMA, confirming distribution. A critical breakdown volume spike to 4.72 M at 1339 validated the technical failure. Volume contraction into the close suggests exhausted buying pressure. The ascending channel pattern failed with a rejected breakout attempt above $0.171. Multiple higher lows from the $0.1633 base were invalidated by the trendline violation. Distribution characteristics emerged through declining highs and failed rebounds. Immediate downside target is toward the $0.1633 support base following the breakdown. Risk management should remain above $0.1716 resistance for short-term bearish positioning. Trading halt resumption patterns are critical for confirming directional momentum.